I'm Jim Csek. You're watching Kelowna Now. I have a special guest today. We have Stephen Johnston from Calgary from Omnigence. I think I said that right.
You did?
There you
Perfect.
go. We're going to talk stagflation. He's one of the directors for Omnigence, and he's put out a paper on stagflation. And maybe just quickly explain what stagflation means. It's kind of like the worstflation of them all: inflation, deflation, and obviously stagflation.
Yeah, I mean, the definition runs the gamut, but just like to agree that what we would all perceive personally as stagflation would be below trend growth and above trend inflation, so that in real terms, like after inflation, GDP per capita is declining. So I mean, everybody's individual standard of living in real terms is declining or stagnant.
Yeah. So kind of like an inflationary environment where you're seeing costs go up, but the economy is not growing, kind of like your purchasing power gets eroded, just kind of like the worst kind of scenario, right? And, an inflationary environment, as long as it's not too inflationary, can be beneficial for assets and that. And deflationary, obviously, lots of people kind of like that sometimes too. It all depends on what assets you're talking about and who you're talking about, I guess, right?
Yeah. Stagflation is one of those set of economic conditions that makes nobody happy.
Right. It's the worst of all inflations. I always like to say that, right? It's a pretty good environment for gold, though.
Yeah, I mean, if you look at the 1970s data, there are like a collection of assets that did extremely well. Gold was one of the outstanding investments of the 1970s, for sure.
So in your paper, you outline a few things here that and I'm going to put my glasses on here for a second. You talk about some of the things that are really affected here: real GDP growth, lowest GDP growth in OECD for the next 30 years. Real GDP growth per capita, flat since 2015. Productivity, labor productivity poor compared to peers. Taxes, high and rising, and taxes continue to go up. We see they want to tax everything. The population growth, rapid population growth, highest immigration rate in the developed world, entering a population trust. And then obviously our demographics, we have this older baby boomer thing going on. And then our currency tends to be weak against the U.S. And then our housing supply, obviously with immigration and low supply, high demand, and energy costs trending upwards. How do we have all those things going on at the same time? Bad management?
Terrible management. Absolutely. Yeah. Basically Canada is the poster child for stagflation. Like if you think of, there was a list of 20 things you shouldn't do separately. Yeah. And you certainly shouldn't do all of them. We've basically done all of them.
We seem I have some background in the resource sector. I was a mine site controller for a while. We seem to be embarrassed of our richest resources that we have. We have kind of like a land of abundance, yet we seem to not want to utilize them.
Yeah, I mean, it's a travesty. When you look at foreign direct investment into Canada, we basically have net capital outflows, meaning capital tends to flow out of the country, not into the country. And that's been going on for 20 years and in earnest for the last decade. So basically, even Canadian investors are choosing to deploy their capital elsewhere. And without capital, you don't have affluence. I mean, it's very straightforward.
And it's kind of like odd that the most recent decision by our managers is to install this or implement a lower threshold for the capital gains exemption.
Yeah, I find it counterintuitive because let me tell an anecdote and just indulge me. We believe that taxes can change behavior and can reduce the availability of things. So we basically put taxes on alcohol to reduce alcohol consumption. We put taxes on cigarettes to reduce the smoking, and we put taxes on carbon to reduce the production of carbon. And yet we will not admit that putting extra taxes on capital reduces the availability of capital. It follows logically that we believe that extra taxes will eliminate those first three things, but we don't believe that extra taxes on capital will eliminate the availability of capital or diminish the availability of capital in the Canadian market. And of course it will, because foreign direct investment capital flows show that capital is flowing out of Canada. And I would be quite certain that after this recent change to the capital gains taxes over the next, unless they're reversed or changed in the coming years, you'll see that capital outflow increase. Of course,
I'm going to add to that. I'm going to bet that people will also flow out of Canada that happen to be high income earners, and they'll take their skills with them along with their capital.
Of course, people are another form of capital. They're just like their intangible capital, their intellectual property. And yeah, I mean, Canada suffers from like all of those sort of worst case scenarios. We've borrowed a lot of money, which in and of itself isn't necessarily bad, but we've borrowed to consume, which is effectively
Yeah,
stealing growth from the future. And we've
right.
we've overinvested in houses. I mean, sorry, just if I could just lapse into some of the data from the report. Canada has very low capital formation. I mean, because we don't have a lot of capital flowing into the market. But even the poor capital formation we have is disproportionately focused on residential real estate. 40% of all the fixed capital formation in Canada is real estate. If you went to the United States, it might be 20. And so we have this very low capital formation, disproportionately skewed to housing, which is a consumption good. Those houses are at historic levels of overvaluation and they're highly levered. I mean, it's just appalling economic and legislative and administrative and policy decision making. I mean, it just is. And so we've set up this set of conditions. They're going to take a very long time to fix,
Yeah,
and they just will.
even if we do get a change of government, it takes a while to kind of like change the trajectory of the ship or whatever, right? It looks like Alberta's doing some good stuff, but
I mean, it'll take decades to fix what's happened because you have to, first of all, delever, and then you have to fix the regulatory environment to attract capital. And then you have to discourage consumption and encourage capital investment. Like right now, we encourage consumption and discourage capital investment. So you've got to change the tax system to do that. We've got to address the tax rates, both on the capital side and the income side in Canada. Um, I mean, I don't want to sound like a doomsayer, but like there is a very long list of things that need to be done, and that which takes decades to create takes decades to fix. It just
yeah.
does.
I think you're just joining the chorus. I mean, you probably are aware Kevin O'Leary says we have some of the worst managers in the world running our country. And it seems like they're doing everything they could possibly do wrong, and they continue to introduce new taxes and figure out ways to punish people. I noticed the other one the other day is like there's a new CPP for people that, because usually around June, some people that are making, like in the 75 plus range are kind of done with CPP and EI. They've maxed out. Now they've introduced another one called CPP2. So just
There's a great quote, and Winston Churchill had lots of great quips, but he said the idea that a country can tax its way to prosperity is the same as standing in a bucket and trying to pull yourself up by the handle.
yeah,
And it's like the idea that somehow that the government at all levels, municipal, provincial, federal, will increase taxes and then redeploy that capital and somehow generate growth ignores the fact that they have to tax in the first place and take the money out of the economy. So the net contribution is typically negative after transaction costs. And it's a view that's very pervasive in Canadian politics.
yeah.
And so that's going to take a long time to fix.
Yeah, how did they fool all these people? Like, I think there's a groundswell of people that have had enough now, but they fooled a lot of people for a long time with these policies.
I mean, and I don't want to take a political perspective here, but the good news is that a lot of decision making over the last decade and decades has been able to ignore economics because we've been riding on a very large capital base, a very affluent and wealthy country. And so it takes a long time to develop this set of negative conditions, but eventually you arrive at a point where the economy is impacted materially. And the good news is we've arrived at that point, and now people start to say, hang on a second, there's all these other interesting things that you're advocating, but I want to know that my standard of living is going to be preserved, and I will vote accordingly. And we've arrived at that moment. And you see actually people arriving at that moment in a lot of countries in the developed world,
Correct.
because we
Yeah.
have reflected our economies. We just have.
Yeah. And I mean, we have such a resource rich nation that we should be employing capital in there and encouraging capital investment. And it just seems odd that we are where we are.
It doesn't take much regulatory risk to discourage capital in the natural resources market because they're very long duration projects.
Mm-hmm.
And they just can't take the risk that the conditions might change over the 20, 30, 40, 50-year life of a project, right?
Yeah.
And so we have unfortunately created regulatory risk.
Yeah. We
Like we
have in
have,
BC. Sorry.
go
So we
ahead.
have in British Columbia here just recently. Our second biggest industry is forestry here, and Canfor, which you probably know that company, um, recently pulled its investment in Houston, closed the Bear Lake mill, and cut back shifts in Prince George. And then Aspen Planers just shut their mill down. I think I'm doing an interview with him tomorrow. They're saying it's all the regulation. They can't get access to timber, and that 10,000 jobs lost last year alone in the forestry sector. And that's out of 100,000 jobs. They're saying that they just can't invest in BC anymore.
Yeah. There's this strange sort of viewpoint that's developed in the West, is that over the course of the last 30 years, we've outsourced all of our manufacturing to Asia and China in particular. And there's this idea that somehow a modern economy doesn't need production. It doesn't need, mines, and it doesn't need oil wells, and it doesn't need, all this production infrastructure. Because we've had economies that largely have eliminated, manufacturing and production. But it hasn't gone away. We've just pushed it somewhere else. But it is critical to the global economy. And the failure to recognize that, particularly as you say, when Canada sits on an abundance of natural resources, is to ignore a key competitive advantage the country has. There would be other countries that would say, "Give me Canada's endowment. We will make something of it." Right?
Yeah.
And to ignore it and say, no, those things aren't necessary in a modern economy is obviously nonsense. Those businesses and industries and processes will just take place elsewhere
Yeah.
because they're critical to the global economy.
Yeah, they say they don't like mining, they don't like this, they don't like that, but they love technology and they always want technology companies. But that iPhone that people use is full of gold, silver, copper, lead, zinc, silica. I mean, we could go on and on and on, right?
I mean, we live in a physical world. Like the idea that we've been dematerialized and somehow we exist in the absence of manufacturing and production and mining and energy is, of course, an absurdity. And once again, Canada has natural competitive advantages in lots of those particular verticals that we should be pursuing. We should be proud of them, and we should encourage them to be developed, because if not here, then somewhere else.
Yeah. So what do we do?
Well, unfortunately, we live in an economy where the federal government has an outsized impact on economic development. We just can't ignore that. And so we need to impress upon the people who represent us that economic issues are important to voters, and that we want these industries to flourish. And I think that like pocketbook issues have not been a Canadian voting concern for decades. I think that they are now. And so I think that hopefully you'll see that message get through, that they
Yeah.
just cannot be ignored anymore.
Well, Danielle Smith and Scott Moe have been fighting back, but I don't see much anywhere else.
It really takes, honestly, the federal government has a very outsized influence in the Canadian economy. These changes or this ethos or this approach has to be adopted federally.
Yeah.
I mean, like the provincial governments can, fight constitutional battles over separation of powers and who has jurisdiction, but ultimately, that kind of instability, foreign investors look at that and go, "I'm not investing in that market." Like if Alberta's in a dispute with the federal government, it's not capital won't flow into the market because it's just uncertainty, right? And so what we need is clear regulatory certainty at the federal government level.
So just to put it in the common man's kind of perspective, or common woman, if you were representing Canada and you had to go to, like G7, G whatever, G20, and you had to like brag about our economy, like it'd be tough to be in that room, wouldn't it? Like it would be like, just like it's like, well, we have stagflation, like.
Sorry, it'd be tough to be proud of the past, but I can certainly be optimistic about the future. It's a really straightforward thing. Canada has massive natural endowments, like on the hard asset side. And we have a stable democracy, and we have rule of law, and we have things that everybody would wish to have in a market where you would invest. Just unleash them.
Yeah.
Just don't impede them, and you would see progress.
Yeah. So I guess that's just going to take the Canadian people to say that they need a change.
Yeah, I mean, Canadian voters need to make it clear that their pocketbook issues are priority number one, and they will not be ignored.
Do you guys look at you're looking at Canada as a whole, stagflation, and how does Alberta fit into that picture? Because I know that they just reported a surplus, like I think of a $4.5 billion surplus. How is Alberta's picture different or similar to the Canadian landscape?
Alberta is a market that's more receptive to capital. And so probably the capital flows, both human capital and monetary capital, are better into Alberta. But once again, I'm sorry to be repetitive. When capital is looking to find a home, it's the regulatory market, it's the long-term regulatory market that either attracts it or pushes it away.
Right.
And so there's a limit to what Alberta can do in the absence of a clear change of direction federally, to say that Canada is a market that's receptive to foreign capital being invested in all of our natural advantages. Until that happens, there's just a limit to what any individual province can achieve.
So kind of like fighting upstream, but still fighting.
Yeah, it's not to say that this shouldn't happen, but it's difficult. It really is the federal government that needs to lead the way. And so, it remains to be seen. Maybe the Liberal government will change. Maybe the Conservatives are the answer. I never speculate on politics because,
No.
It's a fool's errand mostly.
Sometimes it gets painfully obvious, though.
Yeah, it's very obvious that Canada needs to advertise to the world that we are setting up a regulatory environment and a capital environment and a tax environment that's receptive to capital. And that environment will be sustained. It's stable. It won't change in the next election. Because that's the other risk in Canada, is that there's this perception that, it might be this party gets elected and it's, capital flows, and this party gets elected and capital stops. That's enough to stop capital from considering Canada. It has to be clear that this is a sea change. This is a long-term change in the receptivity of the Canadian market to investment.
Yeah. How do you I guess look forward to how do you prepare for the sea change? What is it that the average Canadian can do to kind of prepare for change?
Well, that's a big question. I don't know that you need to prepare. These changes are so slow moving; they'll be very obvious well in advance. You don't have to rush out and do something today. But when you're thinking about stagflation in particular, and how it might impact your current investment portfolio, because we're a private equity manager, we have farmland and private equity. You certainly have to ask yourself the question: if the things that I invested in the last 3 decades, and particularly in the last 2 decades of low inflation, high growth, are they going to generate the same returns in the next 10 years, in the next 20 years, in the event that there's stagflation? Because that which works in high growth, low inflation does typically not work well in high inflation, low growth environments. And I'll just, if I could digress and give you an example, for instance, we have a very large farmland portfolio. It's one of the largest institutional portfolios in Canada. And it typically flourishes in stagflation. And one of the reasons we get a lot of institutional interest is you can make a very small allocation to farmland and hedge a lot of stagflation risk. In the 1970s, farmland went up 400%. So it loved stagflation for reasons that are probably too elaborate for our time on this call. But so you have to start to ask yourself, okay, well, I don't know if there's going to be stagflation for a decade or 20 years, but what if there was? Do I have to make any changes to how I'm invested today? Because if there is, what you have invested in that worked in previously will probably not work going forward. And you can't ignore that. There's that saying, right? You may ignore facts, but facts won't ignore you.
Yeah. So you're one of the few voices out there beating the drum of stagflation, though, because not a lot of people want to talk about it or owe up to it.
It's a depressing topic,
Yeah.
right? I mean, it's basically saying we've done a lot of foolish things for a long
Yeah.
time, and we've set up a very difficult set of macroeconomic conditions that are going to take a long time to fix. In the meantime, stagflation tends to pressure the middle class. Like
Yeah.
it tends to put a lot of pressure on the middle class,
Yeah.
and of course, no one wants to say that.
Yeah.
Like, who wants to, go publicly say that?
Yeah.
But it
Well, I
needs to
mean,
be
the
said.
the finance minister continues to try and tell us that everything is great. Um,
I mean, politicians. This may shock people, but politicians have an incentive to just tell you their message, not necessarily the facts.
yeah.
And of course, no politician wants to say that you know since the time that we've been in power, we've created stagflation
Yeah.
because. Uh, but once again, the thing about stagflation is you may try to hide it and you may try to misdescribe it, but it's very obvious to people on the ground. Like a lot of the voters' dissatisfaction with the economy, although they wouldn't be able to specifically say it was stagflation, is stagflation. They're saying,
Yeah.
listen, my costs are going up, my income isn't, the economy isn't in good shape. Like I'm being squeezed from every direction, right? And so
Mm-hmm.
they wouldn't immediately say, yeah, that's stagflation, but they
Right.
know what it feels like.
Yeah.
And it because of stagflation is the big economic dissatisfaction
Yeah.
of Canadians is because of stagflation right now.
Yeah. We've grown the government. We've increased the payrolls of government. We've grown government spending, but none of it really to produce goods. And I mean, it's ending badly, or it is bad. I don't know how to describe it other than to say, like, it seems like, again, bad to the management practices. Somebody needs to go back to school and learn how the economy works.
I mean, this isn't an issue that's unique to Canada. The entire G7 has been running fiscal deficits for almost
Yeah.
2 decades.
Yeah.
And fiscal deficits are inflationary. No matter how much central bankers and finance officials may try to tell you it isn't, fiscal deficits generate inflation down the line. And we have been running fiscal deficits, meaning governments have been
Mm-hmm.
spending more than they take in tax revenues for decades. And eventually the bill comes due, and we're now it's what we saw in the 70s. There were very large fiscal deficits. The U.S. defaulted on its gold convertibility obligation in 1971, and we had two enormous bouts of inflation that were very hard to extinguish. It took 14, 15 years. And so I would be surprised if this current bout of inflation is the last. It's typically very hard to get rid of.
Yeah, so it'll be interesting to see if there is a change in government, because the person coming in is going to really be a janitor and is going to have to try and clean up a lot, and just see how much patience the Canadians will have with this janitor that comes in to try and kind of like turn the ship.
Yeah, I mean, you put your finger on the issue. Is that the policy, the policy changes that are required to fix stagflation are painful. Like the government has to stop running a fiscal deficit. We have to figure out a tax structure that attracts capital and a tax structure that discourages our current account deficit. We produce more than we consume, more than we produce. But those changes are going to be very painful.
Yeah,
And so while people say I'd like stagflation fixed, they invariably say, but without any reduction in the size of government,
yeah,
and that's typically not possible.
yeah. There's some price to be paid, right? There's a hangover for sure, right?
Yeah, I mean, if you spend 2 decades consuming more than you produce and borrowing to consume, like it's a cliche, but the bill eventually comes due, and the bill has arrived, and it needs to be paid. But those are difficult discussions to have as a nation, as far as Canadians, is to say, do we have the will to change the fundamental conditions and address the issues? And that remains to be seen. I don't know.
Well, is there anything else you want to add today? Anything that I've missed, or anything that you want to kind of like share with Canadians?
No, I mean, I don't. I don't mean to be the bearer of bad tidings. That's not the point. It's just, but nothing can be fixed unless there's an honest discussion about it. And there needs to be an honest discussion about all the conditions that we've set up in Canada. And there needs to be an honest discussion about why we're seeing these economic problems. And we need to agree collectively, at least come to some consensus that we want to fix them and how we're going to fix them. And then on the sort of investment side, because we're an asset manager, is that you need to look at what you're invested in and if there is stagflation, what are the consequences? Because I assure you that there will be if you just continue to invest as you have done in the last decades. It's not to say you can't insulate yourself from the risks, but you have to do different things.
Yeah, if you recognize the environment, then you can at least make changes based on that environment, right?
Yep, and reduce the obvious risks in your portfolio.
Yeah.
I mean, that in and of itself tends to generate returns.
Right. Well, I thank you for your time today. And
Thank
maybe
you for
we'll
having
catch up when there's a change, and then we can see if there how much effort it's going to take to clean up the mess.
It's going to take a big effort, but that's okay.
All right. I thank you for your time, and I thank you for watching Kelowna Now.